Hello and welcome to today's Sifted Talks that is being carried out in partnership with the Royal Academy of Engineering Enterprise Hubs. My name is Daphné Leprince-Ringuet. I'm Sifted's French tech reporter based in Paris. And it's my pleasure to be moderating this talk today, looking at how deep techs are navigating the current market and context. Of course, we're living in a particular world with at once some pretty complex geopolitical tensions that have a direct impact on how deep techs can grow, expand, commercialize, etc. But I'd say it's also a time where we're having unprecedented amounts of funding and excitement from European VCs and VCs across the world, really, from enterprises and from governments about what deep techs can do. And by deep techs, we're obviously going to be talking about a wide variety of deep techs, obviously the AI companies that have been very hot lately, but also other companies in the space, particularly with Atif, Rebecca, and Simon here, who are all founders of deep tech companies. So let me introduce you to, in a little bit more depth, to our fantastic panel today to discuss this. We're going to be joined by Estelle, well, we are joined already by Estelle Godard, the Vice President of Promus Ventures, a VC firm that's originally based out of Chicago, but which extended to Europe in 2021 and now deploys out of Luxembourg. So Promus Ventures invests in early stage deep tech startups, seed and Series A stages. We've got Simon Thomas as well, the CEO of Paragraf, a deep tech startup that spun out of Cambridge University in 2017, which creates next generation electronics out of graphene. So the idea is to create products that have better sensitivity, better robustness, better energy efficiency, and that's particularly promising for industries like automotive, industrial automation, healthcare, etc. We have Atif Syed, the founder of Wootzano, a UK startup that designs robotic systems that can delicately handle fresh produce, like tomatoes and grapes, just after the produce is harvested and before it's shipped. Delivering these services largely in packing houses. And finally, representing the AI world, I suppose, we have Rebecca Gorman, the founder of Aligned AI, which is building a system that improves the tools and components that you use when you're building AI, with the objective of making them more reliable and high quality to create safer AI. A little bit of housekeeping. There will be no standalone Q&A session at the end of the discussion or throughout the discussion, but you can submit your questions throughout using the Q&A function. These will be upvoted and we'll discuss the most popular questions that have been submitted as we go throughout the discussion. Now, excuse me, to get started with a little bit of data, which shows that in 2024, 23% of all early stage rounds, so under $5 million rounds, were in AI and machine learning. So that's nearly 1 in every 4 VC dollars allocated to this area. So I'm interested in picking out what that means for the deep tech scene as a whole. We've obviously got companies that are immediately in the AI, sector with Rebecca. We've got companies that are not directly linked to AI, but that are using AI as well. So essentially, how has this number of more funds being allocated to AI translated for deep tech companies as a whole? How has access to funding been for deep techs as a whole in the past year, or past several years? What are the trends here for you who are directly involved with the reality on the ground? Who would like to get us started? Rebecca, why not? Give us the AI vision of things.
Yeah, so I think this is actually a really interesting time for deep tech in AI. Over the last couple of years, the primary interest in AI has been less of a deep tech focus and more of a low tech focus in AI. So what can you make? Prompting language models, what can you make? Scaling up already existing infrastructures. And now there's, I think with the introduction of DeepSeek, even when it's in the field of AI, I think there's probably likely to be, eventually at least, more investor interest in actually deep tech approaches to artificial intelligence that have a different approach. But also I'm not an investor, so can't reliably comment as well as Estelle can on that area.
Estelle, did you want to bounce off that?
Yeah, I mean, I think we've obviously seen that AI has been dominating funding over the past year, especially. It's taken approximately 30% of the global VC funding and massive investments in foundational models, AI chips, and vertical applications. But beyond kind of the premiums in terms of valuation that we've seen in these companies, we also see that AI is being integrated in the general deep tech fields as well. I mean, it's key to some domains such as humanoids and others. There is definitely a stronger interest in AI, but that being said, doesn't mean that deep tech deals are different from AI, and they still attract a lot of investors, especially in deep tech. We just generally see a lot less kind of generalist funds going to deep tech investments on startups rather than AI, which can be a bit more accessible, and also kind of driven by hot demand in the markets.
Atif and Simon, what's your experience of that? So as obviously you do integrate AI in some ways in some of your work processes, but you're not kind of an AI native necessarily company. How have things been for you in terms of access to funding? Has it been easy as it can be seen sometimes for AI companies, or is it still a bit of a challenge?
Should I start? I mean, so I think the term deep tech can be a lot fuzzy, and when you include software and only AI, it's very different in terms of funding scene here in the UK and Europe. When you talk about deep tech, I mean, we utilize machine learning, deep learning methods. Without that, the robots what we develop, they're not able to know fruits because they're organic. They look very different. So you need to employ a level of deep learning methods to be able to understand what are these robots we're looking at. But fundamentally, when VCs or investors look at us, they look at us as a hardware company. And the problem is that in the UK, I can't comment all over Europe, but at least in the UK, we don't have enough VCs who fund after, I mean, seed maybe yes, but after you've gone past, you're generating revenue, you're now going to a scale-up phase, you're expanding globally like Wootzano is. We're in 8 countries around the world. We are in a bit of a weird, at least in the UK, in a very strange valley of death in terms of VCs, because for the ones who are in the market, we are too far ahead. And then there isn't much funding for people like ourselves. 95% of Wootzano's investors are not British, are not European at all. They're all from the US, which is very different to what everyone else keeps talking about. I mean, it's great that we've got 30% of the funding going in AI, but it's software only. When you talk about hard tech, deep tech, what we do, just VCs just don't have that mandate. They just think we are extremely risky or just not enough interest. So I think when you talk about deep tech, you need to understand that hardware as well as software becomes quite challenging, at least in the UK. We just don't have enough.
Simon, would you concur?
Yeah, just to follow up on that, I completely agree with Atif about his comments there. I probably sit in a corner that's least invested, to be honest. Paragraf is a deep tech, hard tech, materials manufacturing company. So there are all of the boxes that kind of, there's very few Venn diagrams that overlap of investors that have that box as a target to invest in. And particularly, as Atif pulls out, in the UK and even in Europe, putting capital into capital intensive businesses is still seen as a very high risk. We talk about, if we come back to AI, we talk about having future AI, but we very rarely talk about the underpinning chips that need to go into it. So if we don't provide the hardware, it doesn't matter how many language models you make, how much AI you provide, you're not going to get there in the end. So as Atif points out, when we talk about deep tech, we need to be thinking about the whole ecosystem, the software side, the hardware side, and how that integrates together in order to create the technologies we want for the future. If I just go back a bit earlier to your question, there's an interesting point that's happened over the past 3 years that kind of magnifies the issues we have at the moment. The deep tech investment world kind of collapsed about 2.5 years ago, first in the public markets and then in the private markets, which means that the capital has been difficult to raise across the board. So when we talk about having large investment in AI, it has a magnifying impact for deep tech because the pool of capital has shrunk so much that 30% of a much larger pool 2.5 years ago would have meant the whole deep tech industry wouldn't have had such a bad time. But now, because of where we stand in the whole financing landscape, it becomes more magnifying. But I don't think we should really focus on AI as being something that takes investment away from other deep tech. I mean, we've always had these trends in the past, right? If it wasn't AI, it was quantum before. If it wasn't quantum, it was blockchain before that, or it was fintech, or it was, going back even further, VR. So we're always going to have these challenges of technological areas that investors want to put their capital into because they can see the market opportunity. So AI is just the latest in that chain of things that yes, takes a segment, a large segment, and probably rightfully so, because that's where the world needs to develop. But again, the reason we're talking about this at the moment is because actually it's the whole investment world that's gone through a bit of a downturn, which makes that 30% look bigger than what it actually is, really, compared to standard years.
On the topic of attracting investor interest, I guess, making investors interested in the proposal that you have and trying to attract funding, I'll bring in a question from the audience, from Joan Philbin, who's saying, I've seen a lot of investors talking about the importance of building moats recently. I'm also hearing from investors that good tech is not enough. Could you give me some examples of how you did this to the entrepreneurs? But I guess the VC perspective here is also important in terms of what constitutes a strong moat in the deep tech space today, whether you're in AI or not.
I mean, I'm happy to continue if you like. I mean, there's several aspects to that question, actually. I think the first one, the most prominent one, going back to the financing landscape, is the offering more than just the technology. It's certainly, with the past 2 years, investors, and of course we have a great investor with us, so more than happy for Estelle to comment on this, and prove me wrong if I am. But we've seen the need for investors to reduce their risk. And so instead of being early stage VC and being able to, what I would call, bring a visionary product to market with very little revenue evidence, even earlier stage investment now requires that de-risking. So you've got to be able to not only generate a product, but show a really good pathway to market and demonstrate that there's traction. That's something that's become a lot more prominent over the past 2.5 years. I mean, it's good because it shows that those companies have the strength to carry on and go forward. But it's bad in some ways for companies like Paragraf, where the first 4 or 5 years of your work is actually getting a product to market, getting the MVP, and getting the investment to do that can be difficult if you've got to focus on, well, I need sales, I need to get market traction. Well, actually, what you really want is a quality product first, because that underpins your whole commercial strategy going forward. In terms of building the moat, sorry, just to finish up.
Sorry, go ahead. No, sorry,
sorry,
Atif. Go ahead.
Yes, having the ability to be able to defensively differentiate your product is very important. There's a lot of, particularly if you look at the AI investment, there's a lot of overlapping companies that it's very difficult to have that separation from the individual businesses to make sure that you can protect it going forward. I'm sure there will be a lot of consolidation in the AI world going forward because of that. But for companies like Paragraf, who are pushing forward what I would call new technologies that have never been seen before, making sure you're not only defensible, but making sure that moat allows you to have something to deal with large corporates that are incumbents in the future, give you that commercial opportunity, is very, very important.
Yeah, I mean, I think just to add a bit on that, well, for us, actually, the most important is always the team and execution, and in particular in deep tech. I mean, what we see is that companies really need a lot of funding, a lot of cash So execution is really key in that sense, and managing cash flow is kind of at the priority level. The moat is of course important, but it comes with the rest. And I guess when people kind of mention the importance of the moat, it's more a question of being able to raise and being able to survive in this world and in this particular market. Because as you said, there's not that much funding available or that many investors that are patient enough and that can understand the technologies that are being developed at the time, and also that can understand really the difference in sales cycles and the path to revenues, as opposed to other kind of companies that you may see on the market. For AI, because of the I mean the hype that's around it at the moment, we see a lot of companies that raise significant amount of money and that are able to reach high level in valuation that are perhaps a bit too much at some point, because they are and while they are still pre-revenues, because they're able to bring very strong expertise from their team. They have a strong ecosystem surrounding them, and they're able to show already some kind of traction and integration with their regulatory ecosystem. So I guess the answer to that is really like the moat is important, but more important than the moat is really how the team is going to execute and how the team is going to really show its long-term vision, and raise the amount of money that they need to execute that vision. And that in the end is going to be like to be really like differentiating as opposed to other companies. That's really the way that we see it, and we cannot stress that enough. But yeah, that would be my 2 cents on that.
Do you find
So,
that that's sorry, carry on, Atif.
Yeah, so no, just to add what Simon said, funding, obviously, as we all know, it's difficult in the space. What Wootzano did, the positive thing as part of it was we obviously then decided to prove the market. Our robotic system is one of the cheapest out there, first in the world, and currently we're the only robotic system which handles produce in a post-harvest world commercially. So because of less funding around, we had to go and create in little funding you've got the MVP, and that enabled us to now have a robotic system which is exceptionally low cost, and it helps the farmers, helps industry to really adopt these technologies, because the problem for us as farmers and these sort of post-harvest industry, they always run very low margin, especially in the UK and Europe. So having a system which really, having a robotic system which really meets with ROI, that makes complete sense to these guys, that enable us to get to that stage. So when we started raising VC funding, we were revenue generating, we had contracts, which also meant that the terms we were able to negotiate with our investors were a lot more favorable, because the risk is fairly different, as opposed to here we are. It's an amazing product, the first in the market, but we have no idea if the market will adopt it, if the business model works or not. And then that also forced us. In last year, we also got 3 of the leading banks and financial institutions underwrite a robot. So essentially, they buy it and lease it on our behalf. All of that is great. So then our company is reliant on VC funding only. We're not just reliant on that. It's now good to have, as opposed to we really need this to succeed. So yeah, I mean, there's a silver lining in all the stresses and negativity. There's a bit of positivity, because we're forced to survive, and survival means you do everything.
Rebecca, did you want to add something, or in particular?
No,
not particularly. Yeah, I wanted to ask, so we've mentioned a few things here, including the lack of big pockets, I guess, to fund deep tech, the lack of, I think, Atif, you were mentioning kind of the fact that VCs in Europe might be looking for things in deep tech that aren't realistic to deliver. You've just mentioned, questioning whether the VC model for these reasons is the right one for some deep techs. My question is this a European problem? Is it different in other parts of the world? And if so, is one possible solution to navigate that to go and seek this funding elsewhere, particularly in light of the current geopolitical context, I suppose?
I can answer very quickly on this one, just from my own experience. I generally think it's a UK problem or European problem where the VCs just don't have that mandate. Because elsewhere, when you look at Wootzano as a business, and in the US, there is that appetite. The problem is a lot of US VCs and investors expect the business to either be based in the US or have operations in the US, which we did. We have massive operations in California, which enabled us to access that pot of funding. I think if, yes, it's easy to say, oh yeah, the American VCs are a lot more, they're a lot more happy to take these type of risks. But the problem is if you're a British or European startup in this space and you approach an American, US-based VC, I think the chances are it's very less likely that you'll be getting investment unless you have either proved the market, you have de-risked a lot of things before, or you have a significant presence in the US. So I really think it needs to be some sort of, and I think we're going to touch upon government incentives and their role later on, I hope, because I think there has to be some level of intervention for this type of. I mean, it's great. We celebrate a lot in the UK, especially with regards to fintech investment, software investment. But I think it's really important that we start realizing that if this industry is not supported, then you have companies, you have less and less deep tech companies, robotics businesses, succeeding in the UK. If not, they'll be moving out of the country or the region, which I think is bad overall for all sorts of reasons. So you don't want to have that talent and have those industries just to move out because there's absolutely no support or little to no support.
Yeah, maybe I can also add on to that. I think there's definitely a difference in Europe versus rest of the world, and especially versus the US, and now even more than ever. That's structural and in part, and that's been the way it is like for a number of years. I think in Europe we're a bit later. We came in a bit later than the US. The US has kind of a ground that is already based for VCs to flourish and for companies to develop. Everything is well put together, and people like already know how to work together. I think in Europe we're a lot more risk averse. We're starting to be a bit more engaged in funding deep tech companies, but there's still a lot of work to be done in terms of consolidating government funding plus private funding. There's a lot of contracts and grants that are being procured for companies in Europe, but we still need kind of a more aggressive way to deploy those contracts. In the US, you have also a strong base of investors, specialized or even non-specialized, that can go, that have deep pockets, and that can follow on the rounds even at the later stages. In Europe, we have less of that. We're able to show that some companies can raise very significant amount of money. One of our portfolio company, the exploration company, which is a space company, has been able to raise kind of the biggest Series B in Europe so far, with only European investors. So you can already see that there is an improvement towards that, but still there's a lot of elements that needs to be changed. Also, I think geopolitical context is going to impact Europe a lot in the coming years. I think it's easy to see. There were already some regulations like CFIUS that could make it harder for European deep techs to access US funding as well. So we need overall kind of a more strong and aggressive European deep tech funding model. But it's hard, it takes time. And also we do not act as one country in Europe. We're several countries, we have several regulations. And there are several hubs also of specialties. So it's more complex, but it's on a good track, I think.
I mean, from my perspective, just adding to that, I completely agree with what Atif and Estelle just said. There's an underlying thing as well. Most of the investment is based on risk appetite, and that is largely culturally based. The US has a very different risk profile to, for example, the UK and European countries where cultures are very different. I mean, that's changing over time as people get confidence in investing in higher and higher risk prospects, but that's going to take time. Paragraf, for example, has got to raise a significant amount of capital in order to be successful. The likelihood is that will have to be done mainly outside the UK because we're not in that time frame of the risk appetite being picked up in the UK. So we've got to look at global markets, and we've got to look at, there are other aspects that come into it. Geopolitical, geo-economical changes, we can't have any impact on, we just have to manage them. But there are markets around the world where it's better for you to be located. So it's not just about the capital, it's about where can you make the best return, where can you make the largest profits. And so there's other considerations just than bringing the capital in as to where you might want to locate your business and where you might want to take the capital from.
Rebecca, could you tell us a bit more about your funding strategy and how it kind of compares to the experiences of Atif and Simon, and whether you've been facing similar challenges or if you navigated that any differently?
I have noticed that a lot of European and UK VCs take a different approach than US VCs. They're looking for a lower return, but less risk. And I think that this problem that we've been discussing about US being better for scaling in larger rounds is often blamed on European and UK VCs because of this. But I wonder if some of the problem is actually in the hands of founders in the UK and Europe, because we're more used to building that low risk, high multiple, or low risk, lower multiple return story, and less familiar with developing the expansive story and that expansive strategy and vision for a startup. And I wonder whether if European and UK founders adopt a more expansive strategy and narrative, if they may actually occasionally at least get European and UK venture capitalists to surprise themselves with what they may be interested in investing in.
Yeah, so definitely two-sided problem. Like there's the cultural, and then there's the simply size of the tickets that can be given out in Europe. Bringing in a question from the audience, from Rosa Correa, which aligned with a question I wanted to ask as well. When we're looking at the efforts that are made, certainly in Europe, around trying to plug this gap, the question here mentions the European Commission, EIC Accelerator, aiming to fill that investment gap. There's different things. There's the European Tech Champions Initiative that tries to build a more bigger growth stage VCs. We've got efforts to try and unlock money from pension funds and insurers. I guess my question is, do you have faith in these solutions? Do you think it's going to work? Are we going to get bigger pools of capital in Europe in the foreseeable future, at least in a realistic future for you who are entrepreneurs in deep tech today?
Okay. I mean, all of those things are great, and just I'll tell my huge gratitude to Innovate UK, the funding agency in the UK. They've done an exceptional job in helping Wootzano to where it is, with no VC money or very less VC money. We were matching our grants at the early stage of development, building the robots. It's thanks to them we actually have a robotic system which is now global. So I've got faith in those institutions. However, the reality of, are we going to see this change, and are we going to, is that an answer in the short term or even in the foreseeable future, in the next 3 years? I don't think that's I don't think that's the case. The reality is that, you know, and I choose 3 years because a lot changes in 3 years. Companies like ourselves, you know, we can't wait for 3 years or even more for the culture to change. Simon made a very good point. And I was just scrolling through some questions people have asked, and one of them asked about what can we do to change that mindset here in the UK and Europe, and it's culture. And the problem is, culture is very hard to change. You know, it's one of the most difficult things. You can change everything, but culture is something you can't change that easily. So if we've got a culture of being risk averse, if we've got a culture of, you know, pretty much, you know, being quite shut down to these type of risks, then it's going to be difficult. I don't know the answer, but it's not going to be a short-term fix. That I'm sure of. Oh, one more thing I can add. Sorry, one other thing I can add is VCs are one thing, but what has really happening, and for Wootzano as well, what really helped, and we've got an increasing demand coming in from family offices. So we have, so for example, just recently, we're looking to get a couple of European family offices. We have a lot of family offices from Asia and the US who have invested in Wootzano, and they seem to be a lot more open to these type of industries. Whether like the US one, they've got a connection with you know, them having their own farm, and they realize that this issue is, you know, going to solve problems for themselves, and they decided to part way and become partners with us and invest. So family offices could be probably a shorter term fix for a lot of deep tech companies, assuming, you know, you can get hold of the guys, but they seem to be faster, and they seem to be more taking these over, at least Wootzano, it is my experience, compared to VCs.
Yeah, and I'm glad you mentioned Asia, because I think there's a strong focus on the US, obviously, as an alternative or you know, a way to secure more capital turning to the US. But increasingly, would you say that other parts of the world are emerging as alternative sources of capital?
So is that for me?
Yeah, for you, if it's your experience, or I think maybe, yeah, go for it.
Yeah. The answer is yes. Yes. I mean, like I said, our own experiences. We've got funding. You know, we've got investors, family offices, VCs based in the US, Asia, and just very recently, we're getting a couple of family offices in Europe who are coming as part of our next round of investment. So family offices have really led a lot of the things in the recent days for us, in the recent months for us. So I see that as another avenue for other deep tech companies looking into this sector. You know, maybe approach these guys. They may be more willing to take on the risk than VCs.
I think I can support what Atif's saying there as well. I think we talk a lot about VCs for earlier stage companies, or even, you know, we talk in series A, B, C, D. And actually what I'm seeing currently is the change in appetite for some of the other types of funds. So definitely family offices we talk to a lot more now. They tend to be based on a targeted area of whether it's sustainability or whether it's ecologically focused. There tends to be an aim to a family office, but there's other funds like sovereign wealth funds, even private equity, because VCs are starting to push towards, we must be able to see revenues, we must be able to see your commercial traction. All of a sudden, PE funds are starting to go a little bit overlapping with the VC funds. So I think there's more options open today to start up and scale up companies than there were 3 or 4 years ago in terms of the type of fund you can engage with. And certainly globally, there is more interest coming from, for example, Asia. And we used to talk about Asia as being Chinese funds or Singaporean funds, but actually no, there's Malaysian funds now, there's There's Taiwanese funds, there's even Vietnamese funds that are starting to look at technology in the UK and Europe. There is the US, of course, but of course the big one that's been pushing forward over recent years is the Middle East as well. There's lots of money coming in from the Middle East too. So if you think about the investment landscape you've got open to you, we should think beyond just the VC as a vehicle where we can raise capital, even at the slightly earlier stages of the company.
And one more thing is corporate investors, which is also coming quite very. You mentioned about Thailand.
Yeah.
One of our customers who massive chicken exporters, apparently third largest in the world. They are interested again in Wootzano and these sort of things. So corporates, if it matches with their industry and your product matches with them, then that's also another route for taking investment.
Yeah.
Great. So we've talked a lot about funding, and I'm sure we're not going to stop talking about funding. It will find its way into the conversation still. But moving on a little bit, I wanted to bounce off something I think Atif, you already mentioned around, I guess, what comes after funding. So scaling the company, commercializing, enabling adoption of these technologies by customers. One of the questions that came up in the audience was around execution. And what this person is saying is that we've seen there's been some hesitation from customers to integrate and adopt new technologies like robots, automation, even AI, I'd say. We'll see if that's relevant to your experience, Rebecca. How have you been addressing this issue, or how have you seen startups address these issues? I guess that would be targeted to Estelle as well.
Yeah, I mean, for us, you're absolutely right. Any new technology, there's a lot of hesitation. In robotic systems, in post-harvest industry, what we're doing is what the robots are doing, what human beings used to do. So if you have a line of 200 people on a production line, you're putting robots. So 200 people will be replaced by about 110, 120 robots doing exactly the same kind of job. The problem in people's mind is, okay, if the robots break down, if they don't do work, at least I have human beings who could have done it, and I could have asked them to do something. But now I've got these robots, and so there's a big hesitation initially. When we started off, we integrated these systems in such a way that originally it was sort of your very big clients, people who have 1,000+ people working, and they got budgets to take on the risk. But we realized that the biggest hindrance for us was de-risking this technology to the customer. So what we did in Wootzano is we pretty much got the robots at the same price of a human worker in the country where we install it. So instead of hiring a person, you're hiring a robot, and you're paying slightly less cost than what it would be costing you. So the price of the robot per month changes, varies based on where it is. So in the UK is different to the US too. We also sell in Malaysia. So the price difference is very different, and we try to make it very accessible for the industry, so that the customers, even if worst case happens, they're not massively out of pocket by investing millions of dollars or pounds and buying these robots. Obviously, we provide the support, and it takes time. I mean, the first robot we installed was in 2021, end of 2021. It was not until 2023, 24 when we started seeing a lot of word of mouth going out. Oh, these robots work. Here it is. We got case studies, and we're able to showcase, and customers in the industry where we are in, they're very tightly, very close-knit industry. So people talk. You convince one, then you pretty much, you're in the country, and then everyone wants to get it. So experience, of course, may differ. I'm sure Simon will tell from his sensing, graphene sensing, and other aspect. But I'm talking primarily for robotic systems. We also had other issues, such as obviously the people who are on the line in the early stages. We had a lot of the people who were working there, because the robots haven't replaced everyone. So you have half of the pack house with robots, the other half you still have human being doing the exact same job. And we had people who came and sabotaged the robots quite a bit in the early days. They used to push it, move the camera, move the stuff. So then we installed a CCTV camera to see what was happening. There was all sorts of very interesting experiences we've had. But that has obviously died away, because when we started explaining what these robots are actually doing, and how these jobs are not lost, but actually converted from a low-paid and an unskilled job to actually a more paid and skilled job. We've retrained quite a few of the people who were on the production line to become robotic technicians, installation guys and stuff. So they're positive. Eventually people got it, but there are challenges. It's not easy. There are challenges. In the early stages, there are definitely challenges to get these
a bit of
systems out.
education perhaps to make towards customers. Rebecca, you're obviously in a field that's I don't know the answer actually whether enterprises are educated to the importance of implementing the tools and technologies that you bring to them. Did you find similarly that there was a bit of a education process in terms of making sure that enterprises adopt these technologies?
Yeah, we find that there's a lot of education process in using our technologies because we take a different we take a different approach to how to build artificial intelligence. And another approach is needed in order to get systems that are reliable in unexpected situations and do what's intended instead of something else. So that's always an ongoing process with us.
Are you seeing that there's a question that just came in from the audience around, are you seeing any trends with respect to investing in deep tech and impact? So focusing not only on financial return, but also positive impact, which I guess we could say applies to applied AI. Is there more interest?
So it's an interesting time actually for artificial intelligence that's responsible, because the United States has been seeing that recently as a counter, as an attack against effective AI. What we actually find in our research and development is that artificial intelligence that does more of what you want it to do and less of what you don't want it to do is both more responsible and more effective and more powerful. But that's a narrative that's been played down by players that wanted their unreliable systems to gain market traction. So I hope we'll see that narrative shift, and we hope that we'll be a part of changing that narrative, showing that you really need artificial intelligence that's consistent with high fidelity to your true goals. If you want to achieve consistent commercial impact, increase profits, and compete with Asia in artificial intelligence.
Estelle, I'd be interested to know what you're seeing across your portfolio companies when it comes to this, enterprise adoption. What are the trends there? Would you align with what Atif was saying? Is it again a European problem? Are things different in the US? How do you advise that companies navigate that adoption issue to scale?
Yeah, I mean, I think I fully, I agree with what has been said previously. But I'd add a couple of points. So first, I think one key element is really the importance of ROI. So the return on investment for the customers and companies, especially in deep tech, and we've done also a lot of robotics investments. They need to show a critical path towards an ROI. And have short-term results for potential pilot programs or early stage customers that can enable them to efficiently cut costs or improve kind of the efficiency. So that's one. Second, what we've seen with some of our portfolio companies, and I'd mentioned our recent investment, so Capra Robotics, which is a Danish robotics company. They're, for instance, doing a very user-friendly solution that can easily integrate with logistics and maintenance. And the integration part here is key because you need to have a solution that is not only new and has and integrates kind of disruptive technologies, but you want something that is going to be able to integrate with your current environment and with your current solutions. So having that is super important, and we've seen it with some of our companies. Like it's been very useful. It reduces also adoption risks. The other thing is a lot of our companies do strategic partnerships, so they can work with distributors and integrators, and they are able to build trust, and they can provide also localized support based on the different geographies that companies are targeting. So it helps kind of really understand the different hubs, because each country has its own specificities, regulations, and needs in terms of both kind of payload capacities, but also like integration and models. And then so another of our portfolio company, Robco, they focus really on customized robotic arms for manufacturing needs. And they've been able to develop something that's very modular and flexible in terms of systems. And they can be cost effective, and that makes it accessible for the SMEs. So in both of those cases, you can easily integrate. It's simple systems. You don't need to look too hard, but you have something that is simple, nice, that has new needs addressed, and that can grow and provide ROI to the customer very quickly. And that's been a huge impact. That has a huge impact on the customers. Then just one point on the impact of investing in sustainability and innovation. I mean, I think we've seen obviously a lot of interest from VCs to invest in those areas. However, I think it's a bit different. I mean, in deep tech, the case is a bit different, but most of the technologies can have a very good impact on ESG matters, for instance. However, it may take a bit longer to show it and to show it concretely. But there's still yes, a strong interest in that.
Thanks, Estelle. I'll go around the room because I'm interested in hearing what Simon has to say about how enterprises have received graphene-made electronics, and if that's how have you navigated, enabling what tips do you have for companies that need to sell, deep technologies to new customers, and how to convince them?
I think it's kind of we have to kind of just take a step back and go, what do you mean by deep tech? Because there's deep tech and there's deep tech and there's deeper tech, right? and they all require different things to get market traction, to attract customers, to attract partners, to attract collaborators. And I think Estelle's just given a great example of how you can do that with robotics companies, but and in those cases there are already application spaces that you can see. You can see that you're putting robots into, whether it's industrial lines, or if you go deeper than that, where you've got deep tech that is actually you're creating technology that requires somebody to utilize the performance parameters of what you're providing that they've never seen before. It's a much more difficult task. So, for example, taking Paragraf's experience of creating new types of chips that have got performance characteristics that have never been seen, you've got to bring your market along with you. It's not as simple as going to, for example, another chip company or another company that uses chips and going, we're going to replace your incumbent. Because if you do that, you're just going a race to the bottom kind of sales price. What you need to do is what I would call a value sell. So, for example, our chips use 1,000 times less power for certain applications. You go to a customer and you say that, they go, oh, wow, that's fantastic, but how do I use that? So you almost have this education piece that you've got to go through to help the customer find the use case. When they've found that, then it becomes a very, very lucrative channel for both of you. So in terms of getting deep tech, what I'd call is really, really deep tech out there, you need to find companies that have got an evangelist approach to themselves. They're looking for emerging tech. They're looking to develop the next step. So you're looking for partners that, like you, are looking to take something to the next level. And that's a really difficult thing to do, just unearthing the right types of partnerships, the right types of customers that can move forward with you on a technical level and a commercial level is really, really important. This whole question revolves around Europe. How does that work in Europe, right? It doesn't. In my experience, so I'm not talking for everybody here, but in my experience in the chip world, there are very few what I would call inspirational tech development companies in Europe. that will adopt something quickly and go, okay, let's push this forward. If you're looking for that type of company, you have to go to Asia, you have to go to South Korea, you have to go to Taiwan, US, and some parts of the US. I think it's getting a bit better. We are starting to see it a bit more in Europe now, but it's, for us, it's really about finding those people that understand what they will get themselves as a customer by utilizing our technology. So my advice to anybody is find your tech evangelists, go on the forums, go on the places where you find, dare I say it, the geeks that work in the company that can get turned around to their teams and go, wow, have you seen this thing that's coming out? We should try and use this. It's an educational approach as well as a commercial approach that you have to adopt.
Right, boiling down again to
Can
the
I-
culture
can I
and the
just
risk
add-
aversion, I guess. Yeah.
Can I just add
very
something
quick.
to Simon's part very quickly? So you're right. Just on that part, I think customers in the UK, not just VCs, but also customers in the UK are extremely risk averse. So when we start, obviously British company, our biggest sales were outside the UK. We signed a $47 million contract in the US and 30 million pounds contract in Malaysia and other areas. We started integrating it. We had some customers in the UK, but thanks to our international expansion, everyone else using it, the same customer that, oh, you got these robots there. Okay, that seems now very interesting. Can we also start using this? Because no one wants to be the first one, at least in the UK. So exactly what Simon said, you need to find someone who wants to be the first one to take on a brand new technology. It's difficult, not easy.
Definitely.
And there's no easy answer to that as well.
Yeah.
No, sorry, just to rebound on what you just said, I think nice answer, and I just add that sometimes in certain industry, if you manage to get the right first customer, then you can create the FOMO that you want in the rest of the customers within this industry. Kind of showing, okay, this one they've adopted our technology, they're first mover and trying to innovate using our technology to improve their ROI and efficiency. Now, if you don't want to miss the wave, just follow it.
I'll move on the conversation a tiny bit because we've not got much time left, but I think it would be hard to talk about challenges facing deep techs without talking about talent. It's definitely not enough to have 5 minutes to talk about the big gaps in talent that deep techs are facing today. But let's try and get as much as we can from these five last minutes. I suppose is that your experience? Are we missing talent in Europe today? Do we not have enough of it? Is it not qualified enough? What is the sense of the challenge for deep techs today that need qualified talent?
I think we have to be, again, like I said about deep tech, we have to be careful what we mean by talent as well, because talent changes with stage of business. So, for example, being in Cambridge, the early stages of the business, getting scientists, getting people that are really kind of enthusiastic about developing that science is not difficult. We're an innovative country. We have lots and lots of talent in that area. But as you grow and you need more practical skills, more vocational skills, more engineering skills, then definitely we can't compete. If I take my experience in the semiconductor world, we can't compete with other regions of the world in terms of the quality of the people we can get and the volume of people that we can get. So it really, there is definitely, and this is seen throughout industry and throughout companies like ours, there needs to be more talent, and there's reasons and there's ways you can develop that. I am just unashamedly going to say there is a great way to develop talent by one of the leading academies in the UK, the Royal Academy of Engineering. They run a wonderful program called the SHOT Scale-Up Accelerator. So if you'd like to look that up on the Royal Academy of Engineering's website, I would advise you to do so. It's a leadership program that actually pays for your leadership development.
Rebecca, did you want to jump in on talent? I know that was an issue that was close to your heart.
Oh, I wanted to say there's currently actually a brain drain on the UK for a lot of top talent because they'll get paid better in the United States, and there's more recruitment and more jobs. And I think that's an awful shame. I think that we should keep more of the talent that we develop here in the UK and put it into, bring it into amazing businesses like those present. And I hope we'll see a lot more entrepreneurship in the UK really taking advantage of the brilliant minds here.
I guess one question around that is how do you navigate the challenge? So obviously you mentioned, Simon, that some of the solutions are simply probably from a government perspective or policy making perspective, just making sure we get more talent trained. But right now in the immediate, as a company that needs talent right now, how do you manage that? Do you hire from abroad? Do you relocate? Like how do you navigate that challenge?
Okay, I'm going to direct this question. I'm going to direct this comment directly at the UK government. So the only way we can get talent right now is to import it. And if we want to have, there's a great comment just made there by Rebecca about attracting talent to the UK. To do that, you have to have border policies that allow that to happen, in particular visas that allow that to happen. So right now, if we wanted to accelerate growing the talent base in the UK, the easiest way to do it is we must support with schools, we must support with education going through from children. But if you want to learn quickly, bring in exemplars that people can learn from. Allow those people that are excellent in their field, expert in their field, to come in and be the center point of learning for whether it's companies or whether it's research institutes, if we really want to grow that talent base very rapidly.
I think for us, I'm going to say we face the exact same problem, but in the short term, we do get people in the UK. It's extremely expensive for people to even come. The visa costs have shot up, and not only that, from April onwards, now the sponsorship fees have shot up. So it's basically a massive burden for companies to, even though we are registered to sponsor people, it's just too expensive to do that. So we have been looking into hiring team abroad, which is massive shame. It's a massive shame that we're unable to do that in the UK. Right now we've got projects running, massively stressed teams, and it's difficult. And unless obviously government policies change and we make UK an attractive place for people to actually come in and work, we'll have to hire abroad, and which we are doing right now as we speak. And it's horrible, but that's a reality. Business needs to go on.
Estelle, in the 30 seconds or so that we've got left, at the European level, is that also what you're observing across companies?
Yeah, I mean, well, I would not necessarily qualify that as a lack of talent availability. I think there's a lot of talents, especially in AI and deep tech and engineering in Europe. So at the European level, I would say there's a pretty good talent pool available, and it's continuing to grow. The problem is that we're unable to necessarily enable retention of those talents in-house and in Europe, because we are not able to offer as competitive compensation and equity stakes as other places such as the US. And we're unable, while the US come here and shop around for cheap engineering talents that they can incentivize well. So what we would need actually is more programs that would develop kind of better relationship between universities and companies, and also expand more on the competitive equity options and flexible work arrangements and opportunities in Europe. And yeah, also, I mean, as the other ones kind of go where the talents are and maybe import or export talents as needed. Because especially in deep tech, sometimes you just need one talent from a very, very specialized field. And this is going to be a bit more hard to find in the particular hub that you're in.
Great. Well, with this, I'm going to wrap up because we've run out of time, unfortunately. But thank you to everyone who's joined the talk today. And thank you, of course, to the panelists for their great insights on these topics. Thank you to our partner as well, the Royal Academy of Engineering Enterprise Hub, for their support. Sorry if we couldn't take your question. But we can see you next time for the next Sifted Talks. You can go to sifted.eu/talks for more, or follow the link that we're dropping in the chat box now. Thanks again, everyone, and speak soon. Have a lovely day.